Evening, friends. I have a company today which is called Jayaswal Neco Industries. It has hit an upper circuit of 20% today. The company has reported a 5,000% net profit growth in Q4. This is a multi-bagger manufacturing stock. It is in focus after the Q4 results for FY25 with a 5,000% year-on-year growth in net profits, following which the stock hit a 20% jump with the upper circuit. So the price movement, the market capitalization is 4,114 crores, opened at rupees 40, up 13.28% from yesterday's close. After opening, it made a high of 42.37, which is also the 20% circuit mark. Additionally, the yearly return for the stock is minus 26%. Okay, and the 5 past year return is an impressive 1,225%. The company reported 18.71% Y-on-Y increase in revenue from 1,411 crores in Q4 FO24 to 1,675 crore Q4 FY25. On a quarter-on-quarter basis, the company reported an increase of 1.08% in revenue from 1,657 crore in the previous quarter. The net profit saw an increase of 5,000% from 2 crores to 102 crores for the same period. On a quarter-on-quarter basis, the company reported an increase of 32.46% in net profit from 77 crores in the previous quarter. So the huge increase in net profit on a Y-on-Y basis can be attributed to an exceptional item for March 2024 quarter, where it had an exceptional item of 18.25 crores and a huge difference is changes in the inventories of finished goods, work in progress, stock in trade. The company was formed in 1972 with headquarters in Nagpur, Maharashtra. Jayaswal Neco Industries is a leading manufacturer in the iron and steel sector. The company operates a steel plant in Raipur that produces iron billets, rolled products, and sponge iron. It has a strong presence in engineering and automotive castings as well as in sanitary casting products like hubless pipes, manhole covers, and storage tank covers. The view and investment tips. This is a disclaimer. The view and investment tips expressed by the investment expert, broking houses, rating agencies derived through the internet are of their own, and there is no personal input from my side. Investing in equities possesses a risk of financial losses. Investors must therefore exercise due caution while investing or trading in stocks. The author myself, I am not liable for this uh, for any losses in occurring caused as a result of the decision based on this article. Please consult an investment advisor before investing. So some important further information I would like to share. So this is the stock price 42.37 as of today. You can see it is up 20%. Then the last 5 days it's up 19%. Last 1 month you can see the stock has rallied 41.5%, which is an amazing rally. Then the last 6 months the company is a positive of 6.5%. So the volatility that the company had during the time when the market corrected in October, you can see since then the company has been able to recover all the negative trend that it had in the past 6 months, and it has now turned into a positive purely based on the last quarter's results from the net profit of 2 crores in the quarter FY24 to 102 crores in quarter 4 FY25. That is the sole driver of this financial performance and bullish trend. Overall, in the last 1 year, the company is at a negative value of 25.6%. So, this may be a cause of concern. However, with the current trend and with possibility of next 2 quarters being on the expected lines, the company could cover this 25%, 30% in value over the next 6 months. You can see this is the logo of the company. These are the products that it is dealing with, or it's the plant picture, so-called plant picture. Stock price may face volatility due to ownership structures. Stock is at a premium valuation at this point. The company is able to manage its assets very well, so efficiency point of view it is very good. Company has could improve upon asset employment, so it could use its assets in a better way. Then book value 24.4, face value 10 rupees, price to earnings of 36.4, promoter holding 55%, earnings per share last 12 months 1 rupee 16 paise, ROE 9.72, profit growth minus 7.5, return on capital employed 14%, 6.45% negative sales growth. The company is present in the small cap index. Then some company peers to compare. You have companies ranging from 2,500 crore capitalization to about 6,000 crores. You can look at the price ranging from 200 to about 2,300 range. Sorry, from 42 rupees, which is for Neco Industries, to as high as 2,341, which is nearly 2,300 rupees more than Neco Industries. So again, it depends on the kind of business and the kind of performance the company is able to generate, the kind of price to earnings ratio the company is able to gather. You can see a stock P of 24 for Technocraft Industries. Then looking at it, what is important is the return on equity. You can see most of the companies range from between 12 to 15, and the highest in the industry being JTL Industries with 23.6%. Promoter holding, you can see promoters have 55% holding in the company, out of which 97% of their shares have been pledged. So this is one of the biggest reasons why this stock can be highly volatile. Plus on top of it, uh, public holding in the stock is about 45%. No investments in by direct investors, and no investments or very negligible investments by foreign investors. This stock is a highly volatile stock, though it has rallied up 20%. There are chances that the there would be a correction. People will tend to book profits in this stock, and for the company to continue to do well, it will have to uh, perform better than the current results for the next 6 months to keep the bullish trend going, which is seems to be a pretty difficult task for the company to achieve. So it would be advisable that you consult a financial stock advisor for an expert analysis and interpretation of how the company is likely to perform over the next 6 months. Then company has shown a good profit growth of 33% for the past 3 years. The company has shown good revenue growth 17% for the past 3 years. Company has been maintaining healthy ROE of 325% over the last 3 years. So this is a sort of a concern. 325% is way too high. So we'll have to look and see whether this is actually correct. It doesn't seem to be correct, but nevertheless, we'll have to dig down further. Then you have uh, company has a healthy ROC of 30.25%. So again, this is more realistic. Return on capital of 30% over the last 3 years is a more realistic picture. The company has an efficient cash conversion cycle of 67 days. Company has a healthy liquidity position with a current ratio of 3.17. The company is flagship company of Neco Group of Industries, started in 1976 on a small scale iron foundry unit. Jayaswal Neco Industries Foundry Division is now a producer of iron and steel castings. The company is engaged in manufacturing and supply of billets, rolled products, pig iron and skull, sponge iron, pellet steel, and iron and steel castings. Then stock price to earnings of 36, books value of 24.5, return on capital employed is 12.6, so the ROE is 4.86, so 325% was an incorrect figure. Face value is 10 rupees. Company has not paid any dividend, has low interest coverage ratio, poor sales growth of 10% in the last 5 years, tax rate is low, company has low return on equity, promoters have pledged 96% of their shares, company's cost of borrowing is very high. So a lot of negative sentiments or activities within the company. Then these are the peers. I mean, most of the companies are above 40,000 crore market cap. So again, there's no comparison here between the volume of the business that the company is into. Then you can see sales have been a little bit inconsistent. However, in the last 6 months, the sales have grown. Uh, Profit has actually drastically grown in the last 6 months, and the overall company from turned from a negative into a positive in the last 6 9 months, so which is a very good sign. Operating margin is about 16 to 17%. Net profit in the last 1 year has been 113 crores, less than the expected value in the past 3 4 years, almost half of what it has been in the last 3 4 years. So the last 1 year hasn't been that great, specifically the first 6 months of FY25, which has companies seen losses being made, and the last 2 quarters covering up for the loss, as well as uh, providing a very good efficient overall performance in the last 6 months. Sales growth 2% in the last 1 year, profit growth minus 48%, stock growth minus 24%, return on equity last 1 year 5%, so it's going on decreasing. Then borrowings have reduced, which is a good sign in the last 1 year by 500 odd crores, which is an amazing sign. Company would need to work to reduce its borrowings further. Reserves seem to be good, 1,400 crores. Then debtor days remains steady, has seen an improvement in the last 2 years. Inventory days have reduced in the last 1 year, which is a good sign. Still on the high side compared to the last 2 years' performance. Days payable has improved. Cash conversion cycle has also improved. Working capital days have so far been the best in the last 5 years, so which is an amazing sign. Then you can see 2% promoter holding increase in the last 3 months. Overall public uh, sentiment of about 45% shareholding is not a very good sign for this company. But that is it, friends, for this company and the update on this company. We'll connect with another video tomorrow. Please share this with your friends, family, and associates, those who may benefit from this information as well. Thank you for watching. Please share your valuable feedback on ways to improve this presentation content and possibly the way the video is prepared. Thank you. Thank you once again.